Greg Sandfort, CEO of Tractor Supply Company, thank you so much for joining us. We appreciate it.
Glad to be here. Thank you.
Now, you've got about 1,400 stores in 49 states across the country. You're not in metropolitan areas, so that gives you a good sense of the consumer outside of those big areas across the country. What are you seeing? Is the consumer spending?
Well, the consumer is continuing to spend in our business, primarily because we are a needs-based company. So this consumer that we serve has land, has probably large animal, has acreage, has some machinery and such. So they're going to be looking to maintain that, and we haven't seen any real changes in the spending behavior of our customer.
Here we are in the first quarter of 2015. Are you seeing, though, a change in terms of what they're buying when they come into the stores?
Well, there's no question that with the severe weather patterns we've had, they're buying more of what I call staples right now. The seasonal businesses are a little slow to start, but they'll come. They'll come over time.
Now, seasonal businesses, a lot of analysts on Wall Street saying that's one of their concerns with your stock. Here we are coming up on the spring, a big season, summer. How do you smooth that out over the year so that you're consistently bringing in customers into the stores year round?
Well, one of the strategies we employed probably 6 years ago was one called Q, consumable, usable, edible. And that really is the staples of the business. And we made a commitment with inventory and with positioning of our assortments to ensure that we were always in stock for that customer, because our customers travel a distance to get to our stores. So we never wanted to disappoint them. Secondly, with the dispersion of our store base today and our, what I would call, fairly sophisticated supply chain, we can move products between different regions and different markets, working with our vendor base, so we can deal with the weather conditions. Even though they may be severe at times in one market, we've got another market that may have a need for products. So the supply chain is really the key here to help us maintain the business throughout the year.
Now, just last month, you raised your operating margin targets. Are you seeing some pricing power now?
With our size and scale, there is some pricing power, no question. But it's really dictated by the customer. We price individually in the different markets based upon what we believe is the fair price in those markets. And I would tell you that we always have a good value for the customer when they come in.
Roughly 1,400 stores right now. You want to get that up to 2,500 stores. How many stores will you build in 2015?
Somewhere between 110 and 115 this year.
And are there any regions of the country where you see potentially some good opportunities where you're not fully penetrated yet?
Well, clearly the West. If you looked at our store penetration map, the western states are the largest growth area. But we're still finding opportunities, for example, in the state of Texas, where we have our largest store base today, and we're still finding opportunities there with fill-in markets. So across the country, we'll open stores this year, and it's kind of unique as a company that we don't have just one segment of the country we focus on. We focus across the United States.
How do you differentiate yourselves from other big box retailers that are in those same markets, for example, a Walmart?
Well, we're really serving a niche consumer. Again, it's a consumer that has land, has animals, has machinery, and so on and so forth. And this is a lifestyle that they choose. So the difference here is we're a needs-based company. We serve a unique customer that lives out there, lives outside what I would call the metropolitan area. And we have the things they need to support that lifestyle.
A lot of analysts on Wall Street have a $90 price target on your shares. You're trading at about 85 bucks right now. How do you get the stock back up to 90 this year?
It's clear. It's just through performance. As a company, we have to continue to execute well. We believe we do that well. And we're going to fluctuate a little up and down because we're now in the Fortune 5 and there's some movement in that whole box. But I believe it'll be through performance.
Greg Sandfort, thank you so much for joining us. We appreciate it.
Thank you.
For The Street, I'm Ruben Ramirez at the NASDAQ market site. Thank you for joining us.